Welcome everyone. In the last session, we have dealt with preparation of statement of profit and loss. So right now we have the idea of how a statement of profit and loss as well as how a statement of financial position is to be prepared. So before we go further into the practical cases with regard to those statements, we need to have some idea about certain items for which you will specifically deal with adjustments regarding those areas. So we will discuss some of the adjustment areas that usually come in the case of a preparation of financial statement. So let us go in detail regarding each of those cases. Treatment of adjustment items. So here we are going to discuss some of the major types of adjustment cases that you may come across while dealing with a question regarding preparation of financial statement. So some of the adjustments which we are going to discuss will have a peculiar type of adjusting that particular item in certain statements. Right now we have learned two statements. We have to learn two other statements also. So some of the items which we are going to discuss has to be treated in one more or other statements which we will discuss in the future sessions. So for the time being, I will explain the meaning and concept and how that each item has to be adjusted. And after discussing each of these cases, we will go on with the practical case. Don't worry, while dealing practical cases, we will explain again how each item is to be dealt accordingly. So anyway, before we go into the practical scenario, you should have a theoretical idea about each of these items, because definitely you will come across some short answer type questions or a medium type answer questions regarding each these adjustment items. So first of all, first and the foremost type of adjustment you will come across in a preparation of financial statement case: corporate dividend tax. It is otherwise known as dividend distribution tax. So from the term itself, we can easily identify what is the meaning of that particular item. It is a tax item. Tax is a sort of expense. For what we have to pay the tax? For the dividend. So here the corporate dividend tax means the tax paid by the corporate for the dividend provided to their shareholders. That is known as corporate dividend tax. We all know that every company will have numerous number of shareholders, and the companies provide dividend to its shareholders. So while providing dividend to the shareholders, usually the company will pay the tax for the dividend offered to the shareholder, so that the shareholders need not have to pay the tax for the amount received by them, because it is already dealt by the company. So that is known as corporate dividend tax. Where a domestic company declares, remember it usually happens in case of a domestic company, that is company within a certain country's legal and statutory boundaries, as well as the geographical boundary also. Where a domestic company declares and distributes or pays dividend, whether out of current or accumulated profits, shall pay tax on such dividend. The common rate of dividend that is used by the corporate concern during the 2018-19 financial period and also during 2019-20 financial period is 17.42%. And in some of the latest scenarios, companies now are offering, or now not offering, companies are paying the tax of 20% of the dividend offered by the companies to the shareholders. So the DDT, otherwise known as dividend distribution tax, shall be charged on the gross amount instead of amount actually distributed. The gross amount means the amount paid to the shareholders plus the tax payable to the government. So the equation for finding the corporate dividend tax is rate of tax divided by 100 minus rate of tax into dividend distributed. There you will get the corporate dividend tax. So from the problem point of view, usually the rate of tax with regard to the dividend will not be mentioned in the question, but if there is dividend offered by the company to the concerned shareholders, definitely you should provide corporate dividend tax. Remember, it is not mandatory that it should be given as an adjustment or additional information in the question. It is compulsory. If there is any dividend, then you should provide corporate dividend tax. And with regard to providing tax, sometimes they will not mention any rate regarding corporate dividend tax. Usually they will provide a tax rate of 17.472. If not, you can use the percentage 20%. So if rate is specified in the question, go with the rate. If it is not specified in the question, it is better to go with 20%. So this is the aspect with regard to corporate dividend tax, but the CDT should be provided if there is any info about dividend payment method in the question. But during the assessment year 2021, if a shareholder gets dividend from a domestic company, then he shall not be liable to pay any tax on such dividend. We all mentioned about that, as it is exempt from tax under section 10 subsection 34 of the Act. However, in such cases, the domestic company is liable to pay the dividend distribution tax. We have discussed that area, and we even learned how to find the tax amount under section 115-0. The Finance Act of 2020, latest Act, has abolished the DDT and moved to the classical system of taxation, wherein dividends are taxed in the hands of investors. So now the present scenario is that the tax on dividend has to be dealt by the shareholders, because dividend is enjoyed by the shareholders. So they are supposed to pay the tax, not the company. So as per the new rules or as per the new amendment, it is a shareholder who have to pay the tax. Anyway, all these are theoretical aspects. From the problem point of view, if there is any information given regarding dividend in the question, you must provide corporate dividend tax. While dealing the practical case, I will show how the tax is computed and where it is to be shown. So that is with regard to corporate dividend tax. Next one, depreciation. I believe you all know what is meant by depreciation. Depreciation is deduction in the value of a fixed asset. So in depreciation, from the problem point of view, you need to have some idea about some terms. First of all, useful life. In the question they will specify the useful life of fixed asset or like that. So what is the meaning of useful life? It is a period over which an asset is expected to be available for use by an entity. Usually there will be machinery that can be used for 5 years or 6 years. So if a useful life is specified in the question, don't neglect it. It is very important, because for computation of depreciation of a fixed asset, we need useful life. Next one, residual value. This is another term which you will be hearing for the first time, but it is of important aspect in the problem point of view. Residual value, it is the estimated amount that a company would currently obtain from the disposal of the asset after reducing the estimated cost of disposal. In simple terms, we can say scrap value, or we can, in colloquial term, we used to say akri vala. So residual value is the amount that a company would obtain from the disposal of the asset. Remember, from the disposal of the asset after deducting the estimated cost of disposal. If there is any cost for disposing that particular asset is there, you have to consider that cost, and after that, if there is any amount left out, that amount is known as residual value, and it is also very important while dealing with depreciation. Residual value is disposal value minus disposal cost. Methods of depreciation. From the problem side, it is not a issue regarding the method of depreciation, because usually in the practical cases we will be using straight line method. The main patterns of computing depreciation is straight line method, diminishing balance method, and units of production. I believe you all know what is meant by straight line method, diminishing balance method, and units of production. So how it is treated? From now on, listen very carefully. In the statement of profit and loss, or for the convenience we can say in the trading profit and loss account. The other name of trading profit and loss account is statement of profit and loss. It is shown as an expense under depreciation and other amortization expenses. So where here we have to show the depreciation. We already dealt such cases in the previous session. So in the statement of profit and loss account, you have to show depreciation as an expense, and where else we have to show the depreciation, because all these are given in the adjustments. Remember, there is an old rule is that whatever information given in the adjustment, you have to show it in two different areas while preparing financial statement. Even though it doesn't have any scientific approval, we have learned about that. We are using a double entry system, so and a transaction has to be recorded in two sides. So as per that principle, every adjustment will be recorded twice in anywhere while preparing financial statement. So depreciation will be given in the adjustment. So one we have all recorded in the statement of profit and loss. Where else we have to show the depreciation? Next is in the statement of financial position or else balance sheet, it is deducted from the concerned fixed asset. And remember, you will be dealing with a practical case where you are given a trial balance, and from that trial balance you have to prepare the financial statement, and depreciation is usually given as an adjustment. Sometimes you may come across a question where depreciation is given in the trial balance. So if an item given in the trial balance, do we have to show that particular item twice in any part of the financial statement? No, we don't have to. So if depreciation is given in the trial balance instead of an additional information, you have to show the depreciation only in the statement of profit and loss. Never show the item as a deductible value from the fixed asset in the statement of financial position if the depreciation is given in the trial balance. I hope you have understand the concept. Next one. TDS on interest income. Some of you have heard about the term TDS. TDS means tax deducted at source. So from here onwards we will be using, see, there are three columns. Here I will specify the item of adjustment which we are going to discuss. Here we will discuss about how it is to be shown in the statement of profit and loss, and here we will discuss how that particular item can be dealt in the statement of financial position. Simple terms we can say this one how we are going to deal an item in a trading profit and loss account, and here how we are going to deal that same item in the balance sheet. So that is the pattern of explanation. So first one, TDS. So tax deducted at source, or we can simply say the amount of income shown in it should be shown in the statement of profit and loss. The gross amount of interest income treated as an income shown in the statement of profit and loss under other incomes. One more thing, it will be directly given in the question. So you need not have to worry about how you have to compute TDS like that. So it is the income, it is an income item, it should be shown in the statement of profit and loss under other incomes. There are certain heads. So where we have to show the TDS if it was given in the adjustment. So one is you have to show in the statement of profit and loss account. Another is show as current tax asset under the head current assets. So remember these adjustments. We will discuss these cases while discussing the practical problems. Anyway, write down, familiarize each items. These are common adjustments you will come across in a question. Next item, interest on loans due. If you come across a question where interest on loan due is or outstanding is specified in the adjustment, how you are going to treat that? We all know what is meant by interest on loan, and interest on loan due means outstanding interest, that is an amount we are liable to pay. We haven't paid yet, we have to pay. In the statement of profit and loss, it should be shown under finance cost. and in the statement of financial position it is shown under current liabilities. So where is the current liabilities come under? Under statement of financial position it comes under financial liabilities. So under financial liabilities there is subheading current liabilities. Under current liabilities you have to show interest on loans due. Next one, closing stock. This is a common type of adjustment we all have dealt while dealing a preparation of financial statement. It will be given in the adjustment. So where we have to show, since in the preparation of statement of profit and loss is almost similar to the trading profit and loss, but there are some changes while dealing with certain items. We know that in the statement of profit and loss the closing stock and opening stock are dealt in a peculiar manner while dealing with the statement of profit and loss. So it should be shown under the change in inventory of statement of profit and loss. Under change in inventory we will take the difference between opening stock and closing stock. After that it has to be shown under current assets in statement of financial position. Next one, provisions. I have mentioned about the provisions previously. Provision means an amount set aside out of our earnings or profit to meet some specific purpose which are considered as unforeseen contingencies. So provision, how this provision has to be adjusted. In the statement of profit and loss it is shown as an expense, whereas in the statement of financial position or balance sheet it is shown under the head current liabilities, and current liabilities comes under financial liabilities. Next one, outstanding expenses. I believe we all know what is meant by outstanding expenses. The interest on loan due and outstanding expenses is almost similar, but there are difference. Interest on loan is with regard to any bank loan, and outstanding expenses with regard to any expenses. So how we are going to treat that? Usually interest on loan due means there will be no information regarding any other interest paid during the year, so it will be shown as an item, single item under financial cost in the statement of profit and loss. Whereas an outstanding expense, usually a part of the expense might have paid during the year, but another part we have failed to pay. So you need to add the outstanding amount with the respective expense. So it shall be included with the concerned expenses in the statement of profit and loss. Just like the adjustment which you have dealt in the case of trading profit and loss account. So it is shown as an addition to particular expense in the statement of profit and loss. Since it is a liability and it is shown under current liability in statement of financial position. Next one, prepaid expenses. Prepaid expense means any expenses that are paid in advance. So how it is to be treated? We have dealt the same case in your plus one commerce where you have prepared a financial statement, and I believe you all know how to deal with a prepaid expense adjustment. Prepaid expense adjustment will be given in the adjustment area as an additional information. So prepaid expense are expenses paid in advance that belongs to the next financial year and doesn't belong to the current financial year. So we can't show in the present or current financial statement. So it is to be deducted. So it shall be deducted from the concerned expense in the statement of profit and loss. Since it is an advance payment, it is treated as a sort of asset. It comes under the head current assets in the statement of financial position. Next one, accrued income. That means income due but not received shall be included in the income appearing in the statement of profit and loss. Just like the outstanding expenses, it is almost like outstanding income, but we never use the term outstanding income, we will use the term accrued income. Just like an outstanding expense, how you dealt the outstanding expense, the same pattern is followed in case of accrued income, but in the income side. So it shall be added to the concerned item of income in the statement of profit and loss and shown as a current asset item in the statement of financial position. Income received in advance. income received in advance is an amount of income which we have received for the period, but actually it belongs to the next period or next financial year. So do we have to record the transaction in the current financial year? No, we shouldn't record. So we have to deduct that amount from the concerned income. So it shall be deducted from the concerned income in the statement of profit and loss. Since it is an amount received in advance, it doesn't belong to the current period, that is, we are not liable to receive that amount for the period. So it is considered as a sort of liability. So it is shown as a current liability under statement of financial position. Next one, advance payment of tax. So usually it will be given as an item in the trial balance. Sometimes it may be given in the adjustment side. Anyway, remember, advance payment of tax, if it is given in the trial balance, it will be shown in the debit side. So advance tax paid by the company appearing as a debit balance in the trial balance shall be shown in the balance sheet under current loans and advances under the head current assets. There will not be any adjustment that has to be done in the statement of profit and loss, because there will not be any other information regarding advance payment of tax. It will be a one item that will be shown in the trial balance. It will not be shown, or it will not be provided under additional information. Usually it will be shown in the trial balance as a debit balance item. So you have to show this particular item in the current assets under the head current loans and advances. Next one, provision for taxation. This is the amount set aside out of profit in order to meet the taxation liability of the company. It is difficult to determine the actual tax liability at the time of preparing final accounts, because the taxable profit is different from accounting profit. So the amount set aside out of profit for taxation actually consists of current tax and deferred tax. We have learned about the current tax and deferred tax while preparing statement of financial position, mainly in the statement of profit and loss, which are shown in the statement of profit and loss as expenses. Hence the provision for tax made during the year can shown as an expense in the statement of profit and loss, and it should also be shown as short-term provisions under current liabilities if provision for tax is given as an additional information. In that case, you have to do these two steps. If the provision for tax is shown only in the trial balance, you have to show only in the statement of profit and loss as a deduction from profit before tax amount. If it is given in the additional information, you have to do this one also, and also it has to be shown under current liabilities. Next one, contingent liabilities and commitment. Contingent liabilities means a liability which may or may not arise in future. It is not an actual liability, because the company having yet liable to deal with such liabilities, but still it may arise in future. We can't confirm about whether the company has to deal that liability in the future for sure. So its happening depends on some events which are uncertain. The contingent liability is not shown into any of the books. So we cannot show it in the statement of profit and loss, and we cannot show it in the statement of financial positions, because since it haven't yet happened. However, there is an existence of contingent liability for the concern, and it should be disclosed in the balance sheet as a footnote. So whenever there is a contingent liability is mentioned in a question which you are going to deal in the university exam, if there is contingent liability, you need not have to show that particular item in statement of profit and loss or statement of financial position. Show the item as a footnote in the end of the balance sheet. End of the balance sheet, after closing the balances of assets and liability side, show as an additional information after the preparing balance sheet as a note showing contingent liability of the company amount to rupees this much. Similarly, for in the contingent assets also, you have to show like that. Provision for taxation, we already discussed about provision for taxation. We will discuss in detail about provision for taxation while dealing a practical case. Next one, transfer to reserve, or we can say retained earnings. Every company will set aside a portion of profit for setting aside to deal with certain unforeseen contingency. So while companies set aside the amount for meeting some unforeseen contingency, because we don't know what issue the company is going to face in future, but still the company has to prepare for it. So when the company is setting aside a certain amount of a certain part of profit to meet unforeseen contingency, because we doesn't know the purpose of the use, it is known as reserves. Retained earnings is almost similar to that. Retained earnings means we are retaining the earnings of the company within the business. That is known as retained earnings. We all know the earnings of the company belongs to owners of the company. We have to distribute the earnings to the owners. But sometimes the company might retain the earnings instead of distributing it to the owners. With the prior permission of the owners only they are doing it. The main purpose is the company plans to use those earnings for the development of the company, because ultimately the development and any other activities that is positive for the development or growth of the company ultimately increases the income of the shareholder. So sometimes the shareholders also agree to retain the earnings within the company so as to meet either unforeseen contingencies or for developmental purposes. That is known as transfer to reserve or retained earnings. That is, the simple meaning means from the profit a certain amount is set aside for within the organization for meeting certain purposes instead of distributing it as dividend or interest to outside parties or the owners. So when transfer to reserve or a transfer to retained earnings comes as an adjustment in the financial statement question, you have to show in the appropriate head in the statement of change in equity. That is the next statement which we are going to learn. Statement of changes in equity. We will learn about the statement of changes in equity in the coming sessions. Whenever there is a transfer to reserve, you have to show that amount transferred from the profit to reserve. It has to be shown under statement of changes in equity. And after that, it has to be shown under the heading retained earnings under the head equity in the statement of financial position. So these are the common adjustments you might face while dealing with a practical case where you have to prepare the statement of financial position, statement of profit and loss, as well as the statement of changes in equity. Apart from that, there are many other adjustments regarding the same topic. We will discuss each of these cases or any other further cases while dealing with the practical situations. Until then, go through all these cases. If you have any queries, please do let me know. And also, apart from this table alone, you have to go through the theoretical aspects that is shown and discussed in your textbooks. So go through that theoretical areas also. So before we go further into the preparation of financial statement or final accounts, we have to discuss two more areas. How to find the amount of reserves and surplus. During the discussion of the theoretical aspect, we have briefly explained the concept of reserves and surplus and what are the items that has to be considered in order to find out the amount of reserves and surplus, so that we can show that particular item under the head other equities in the statement of financial position. Even though we have shown a format for computing the reserves and surplus, here we will show the complete details of the items you may come across in a practical case. Previously, we have shown just a sample pattern for computing the reserves and surplus. Today, we will discuss all the items you might come across in a practical case or in a university exams. So, from the problem point of view, we are going to discuss how the reserves and surplus can be computed. If there is any information or amount regarding dividend equalization fund, it has to be shown under the heading. If there is any information regarding security premium, add along with the dividend equalization fund. Apart from this dividend equalization fund and security premium, remember the first and the foremost item that has to consider under reserves and surplus are the reserves itself. There are plenty of reserves that comes under the same category. So if there is any reserves, show all those items under reserves and surplus. So apart from that, these are some of the special items which you might miss in a practical case or in a university exam. So dividend equalization fund, you have to add it. Security premium, add it. Any general reserve, usually it will be given as an additional information, because in the bracket I have shown as transferred. It is a common adjustment while dealing a practical case, because certain amount will be transferred to general reserve from the profit. So such general reserve amount has to be shown here. It has to be added. Any general reserve that is shown in the trial balance also should be added. This is a common item that will be there in almost all the financial statement. It will be given as a common item in the trial balance. If there is an amount, it should be added. Remember, this one will be given as an adjustment or additional information. This one will be shown in the trial balance. And apart from that, also add other head surpluses. So apart from these items, remember there are many other reserves. We have discussed about the different types of reserves and reserve funds. Whenever there is reserves and reserve funds in a question or a case, add those items under the reserves and surplus heading. And regarding the information regarding the different types of reserves, please refer the theoretical aspects for the reserves and surplus, which we have discussed while dealing with the format for presenting the statement of financial position. So under surpluses, there will be an item as surplus given directly in the question. You have to add it. With those surplus, you have to add the profit from SOPL. Remember, it is a common mistake you guys will make while preparing statement of financial position only. You have to do all these steps. Before preparing the statement of financial position, you might already prepare the statement of profit and loss. So while preparing statement of financial position, you need to find out this. Along with this, you need to add the profit from statement of profit and loss, because we have already prepared the statement of profit and loss. After preparing statement and profit and loss only, we will be preparing reserves and surplus. So the profit which you have computed from the statement of profit and loss, it should be added here. After that, any opening profit, it will be given directly in the trial balance. It will be given as an opening profit. Instead of opening profit, they might give profit for the period, and within the brackets they will give an opening date. That means opening profit. Add that amount. From all these items, you have to deduct transfer to reserve. Don't get confused. Transfer to reserves, because in reserves and surplus, we already included general reserve transfer. Transfer to reserve is already included here. Why we have to deduct it? Because reserves and surplus means we include all types of reserves and funds, and under surplus we include all sort of profits. See, profits. Reserve means transfer to reserve. From how we are going to transfer to reserve? We are transferring a portion of profit to reserve. So we have added as general reserve transfer, because we are dealing with the reserve heads, and the amount in general reserve is obtained from the statement of profit and loss. So we have to deduct that amount. That is why we are adding here and deducting here. The net effect is you can neglect taking any amount transferred to the reserve from the profit. If you are neglecting it, don't take here and don't deduct here also. Otherwise, follow this pattern. I am not going to mix the two types of computations. Follow this pattern. I believe you have understand the logic. If you didn't get the logic, learn this format. If you want to learn the logic, contact me personally. So transfer to reserve, you have to deduct it. After that, any proposed dividend, because here these dividends are provided out of profit. Profits comes under surplus. That is why we are deducting. Finally, CDT. CDT means corporate dividend tax. It is an item which we will compute separately, but we have to deduct from these items in order to arrive at the amount of reserves and surplus, which has to be shown under the head other equity. So this is the pattern of computing reserves and surplus from the examination point of view, remember this pattern as well as the pattern which we have learned while discussing the statement of financial position. So, the next item which you need to give importance is savings in tax provisions. Sometimes it is given as an adjustment item. It will be very rare, but sometimes you may come across as an adjustment. That is, the company has made some savings in the tax provisions. If such an item comes in a question, find out the amount shown or given or mentioned in the question, just add that amount along with the reserves and surplus total. It is a rare case, but anyway, prepare for that. Next one, provisions. This is another important hint. You have to find out the total amount of provision, because during the year the company might be dealing with more than one provisions or amount set aside for meeting provisions. I believe you all know what is the meaning of provision. That is the amount set aside out of profit to meet any particular unforeseen contingency. There will be a purpose for meeting. So, in order to meet that particular purpose, the amount will be set aside out of profit. That is known as provisions. Under provisions, the main items are proposed dividend. The same item is also shown here. You have to show here also. Provision for tax, CDT, corporate dividend tax. This amount has to be considered. So, these are the items that has to be given prior importance before you go for dealing with preparation of financial statement as per the IND-AS, that is compiled with or complied with IFRS standards. So, go through all these areas, give relevance to these theoretical aspects, because it is very important. You may come across any theoretical questions or cases regarding all these scenarios. You should go through all these aspects and also refer the text regarding the theories relating to these areas, because there is a limitation for showing all the theory in the slides. So you have to go through the theories mentioned or stated in your text. Go through it. If you have any queries regarding any of these items listed or mentioned here, please do let me know. I will be ready to help you. So in the coming session, we will discuss about how to prepare the financial statements.